Hello, morning, evening. It is Monday the 23rd. It is here in Thailand anyway. It's 5:45 in the morning, so my trading week has started. This is a daily chart of the dollar index, which if you're a new subscriber, I've got plenty of new subscribers, so I'm going to talk you through this. We spotted this little double top here back in June and predicted the market would fall, and indeed it did. We predicted it would fall to the 23.6% Fibonacci support coupled with the 55-day moving average, and we predicted that it would then reverse. And well, I wasn't sure it would come up and retest this level. I was actually at this point wondering if this was going to turn into a head and shoulders top, but it didn't. In the end, we dipped back down towards that support level and rallied up again. And you can see we now have what is in fact a triple top. So this clear negative candle on Thursday was our sell signal, and of course I warned everyone to get short the dollar, and bang, big down day on Friday. So where do we stand now? Yes, we do have some support down here. We do have some support from the 55-day moving average. You can see how really the price is just tracked above that 55-day moving average. So if we do break below 94.30 today, that will be another sell signal, which I tend to think will happen because this does look particularly negative. Then if we break below, so 94.20, 94.30 is the support area, but I don't think it's certainly not strong enough to be trying a long position. This looks quite negative. A break below 94.20 will signal further losses, and we should see 93.80 quite quickly. I don't think that's as strong as it was now, and a break below there will, or a break below here, which is 93.70, so 93.80, 93.70 is your next target, and once that is broken, we have confirmation of the double, or in fact triple top, and then we will head significantly lower. I can't see any reason why we won't head straight for 93.20, but again, I don't expect that to hold. So the outlook for the dollar is particularly negative on the index. Just looking at the weekly chart. Again, huge amount of resistance up here from these moving averages, so it's not a surprise that we turned around. All these candles, well, most of these candles look quite negative with the long upper shadows. Yeah, this just looked all, and you can see how overbought we are, needing to ease that overbought position where we've just started to. So the whole thing looks very negative for the dollar. Any strength at all today, I would suggest scaling into some shorts. I can't give you some specific levels because we've already dropped significantly. But I would suggest if we get anywhere near 95.00, then you want to start selling if you're not already short. I mean, I don't really think we'll see that, to be fair. And I'm pretty sure we won't see 95.50 again this summer. If we were to revisit this level, it would more than likely be broken and we'd go through it. So if something causes market to rally up here, I don't see this holding again. So I don't think we'll get anywhere near it. I hope that makes sense. Now, the Aussie dollar has got a double bottom. We were looking for the market to retrace, and I wrote in my reports last week, we'll see if we get a double bottom on the retest of the low. We did. We've got that double bottom, big positive candle, engulfing candle. On Friday tells me that this has reversed, and the Aussie will rally significantly against the dollar over the summer, or what's left of the summer. We had a 61.8% fib support down here at 73.75. That's held perfectly with some nice bullish candles on this double bottom on the weekly chart. So everything looks positive for the dollar yen, and yeah, we need to. I was long on Friday, but what I would suggest is watch for the break above 94.40 for the next buy signal. So if you're not long, and I'm not long, I got out of my longs on Friday for the weekend, but you can see 74.30, 74.40 is your little resistance level. So a break above there should push us up to at least 7,500 at the start of this week. The Euro chart is not as clear as the dollar index, which is unusual because the euro makes up the large majority of the dollar index. You can see here really this is just a sideways trading pattern. If it wasn't for the other charts that I look at, I would have no strong opinion on the euro. But I'm going to go with the bullish signals that I'm getting from the dollar index. Here's your sort of consolidation wedge, which really to me would be a consolidation pattern, and therefore I would expect to break lower and to see this continue further lower to at least 14.50, 14.40. But because of what I'm seeing on the other charts, I'm going to watch for a break above, excuse me, 117.50, 117.60, and take that as my buy signal. So I'm not long this at the moment. I don't know any strong positions over the weekend. In fact, I had a great week last week. Just zeroed most of it out in order to enjoy the weekend and start fresh on Monday. So I will be looking to buy on a break above 117.50, 117.60. I'm not very good at buying breakouts, so you could be paying 117.60 and you could see it dip down to 117.40, 117.30 before it goes again. They're not easy to trade, so you have to bear this in mind. I can't really give you any advice on how to trade a breakout. They do tend to wobble around the breakout area before they go and make you question your position. But I feel strongly that once we break this, we'll shoot straight up to 118.50 and eventually to the 119.00, 119.10 area at least. Note we've got this moving average resistance up here, but we'll worry about that when we get near it. Look at the weekly chart. Again, that doesn't really tell us anything. We do have some candles with some long lower wicks, which is mildly bullish. But yeah, I'm gonna go with a breakout on this one this morning. New Zealand dollar not really giving us any strong signals either. It's just a sideways pattern, which again I would normally consider to be a consolidation pattern before the next leg lower. But we do have good support down here from a little trend line going back just over a year, and we have the 61.8% fib at 67.39. So you can see on a weekly basis, although we did spike below that 67.39 support area in each of the last 3 weeks, we closed each of the last 3 weeks well above it. So I'm going to say that this trend line and the fib has held, and this is going to be positive for this week. Where do we get into a long? That's the question. Well, it looks like we're going to head up towards, we're in no man's land here, as you can see. We're not in an area where you can now buy into this pair with a low risk. So it's almost worth being patient. A break above 68.20 should push us up to 68.50, 68.60, which is a clear Fibonacci resistance level. It's also the low back in May. It's also the high in July. So clearly this is going to be resistance, and I wouldn't be surprised if it holds today. In fact, although shorts will be risky, we don't want to be selling into a short position in a market that longer term looks bullish. We stick with the trend, of course. So let's just see what happens up here. But a break through 68.60 would be a nice buy signal. The cable was really difficult. Pound versus the dollar was really difficult last week because it looks so negative. You can see this very, very clear trend, negative trend ever since the middle of April. In fact, we had a double top there. So this was a clear short, and once it had broken this trend line here, it was obviously going to go significantly lower, and it did. Now, the first time we tested the 100-week moving average, we saw a really strong bounce with a decent bullish candle here, but the market reversed over the last 2 weeks, and last week significantly broke that 100-week moving average by almost, well, over 100 pips. So I took that as more negativity. I had to. We'd broken the previous low from June. We'd broken the 500-day moving average as well. It all looked hideous. There was no support on the weekly chart for me to consider a bounce. But that dollar index reversed, and that just dragged the pound up. And look at this big bullish candle as we push back above the 500-day moving average. So there's no bullish pattern, but this certainly does look positive for now. And I wouldn't be surprised to see it head up towards 132.90. Again, the problem is there was no clear buy signal down here, so there was no way for me to get long. I suppose the best thing I would suggest is if we dip down to 130.80, 130.70, it's possible. It would be worth buying into a long. You could stop below 130.40, so it's a low risk trade, and then buy again if we get down to 129.65, 55. But because of these recovery in so many pairs against the dollar on Friday, we are in what I call no man's land. We are in areas where it's difficult to jump straight in because in fact your stop would in theory have to be below 129.55 if you bought it right now. But look for that little trade first. We got short the euro yen last week. We got short the euro yen up at the 200-day moving average. I predicted that would hold and we'd turn lower. Well, that certainly did work. We did turn lower. We didn't have a significant, well, we had a decent drop on Friday, but it didn't go down as far as it could have done. The dollar collapsed, but obviously the dollar collapsed, the yen pushed a lot higher, but the euro recovered as well. So the position wasn't as juicy as I had hoped it would be. It still looks negative. It still looks like the euro will drop against the yen, but having said that, there is a better trade out there anyway, just being long the yen against the dollar. Does that make sense? I hope so. Anyway, this does look negative. On the weekly chart, we do have a negative candle. I am small short. I did cover a lot on Friday, but if we get any strength, I will probably sell into that. I'm going to have to examine it in more detail and put something on the written reports for you. But yeah, it does look negative. And if you're holding shorts, I think that looks comfortable.